Are you a self-storage owner or operator looking for service providers to help at your facility? Well, the Storage Business Owners Alliance, also known as the SBOA, has you covered. The SBOA is a premier online hub for connecting self-storage owners and operators to industry-leading products and service providers. We provide one-stop shopping for your business with exclusive offers to save time and money. At the SBOA, we believe by coming together, we help owners and operators grow revenue, gain purchasing power, reduce expenses, improve efficiencies, and increase profitability. We also offer many resources such as our conferences and self-storage unlock webinars to help self-storage owners and operators gain the knowledge needed to become more competitive in the industry. To become an SBOA member or to find out more information, please visit www.thesboa.com today. We can't wait for you to join the Alliance.
Thank you for calling self-storage. This is how may I help you?
Yeah, and do you guys have any storage available, spots available?
You said you're looking for a parking space?
No, I need some storage. I'm moving to town, and I need to put my house in there, or my apartment, I guess I should say.
Okay, absolutely. Are you looking for an air-conditioned unit or a non-climate?
I think non-climate. I don't think anything in there is probably that, sensitive.
All right, and so with that, our non-climate units with the drive-up access, we have the largest being 10 by 35s, and then down from that we have 10 by 30s, 10 by 20s, and 10 by 15.
Yeah, maybe a 10 by 15. I mean, actually a 10 by 20.
A 10 by 20? All right, and those are starting at $269 base.
Okay, thank you very much.
You're welcome. Have a great day.
You too. Bye.
In a world where brand experience is paramount, upholding your company's standards demands unwavering consistency in every location. At the SBOA, we understand the critical role consistency plays in driving your business's success. That is why we joined forces with MSI to introduce a revolutionary internal audit program tailored to meet the specific needs of your organization. Our game-changing audit program leverages cutting-edge technology and expert insight to bring you unparalleled accuracy and reliability. We know that success in this competitive environment is paved with adherence to operational requirements, and every company has its own standards along with state and local regulations to adhere to. So we've made our internal audit system completely customizable, all in a user-friendly app. The app enables on-site agents to collect real-time data and insights from their respective locations. This feature ensures that information is up to date and allows for quick responses to any issues or challenges that could arise. Our internal audit program also has advanced photo and video reporting capabilities. These visual reporting tools allow leadership to visualize non-compliant sites and gain a comprehensive understanding of the issues, with specific examples for clear context, which enhances communication and leads to faster resolutions. And it can be done with just a few clicks and the snap of a photo or quick video. And our program provides an in-depth understanding of each store's performance and challenges. This feature allows for a comprehensive assessment of how well each location adheres to operational requirements and brand standards, helping to identify areas for improvement. Are you ready to take your self-storage business to the next level? Explore our comprehensive suite of services, including internal audit programs, mystery shopping, and unlock your full potential. Contact us today to embark on a journey of excellence and success. 248-254-9000. Good morning, everyone in self-storage. My name is Iris Segan, the president of the Self-Storage Business Owners Alliance, better known as the SBOA. Thank you for joining us today. While we let everyone else join us, I want to go ahead and go through some housekeeping rules. Our episode today, by the way, is Mastering the New Rules for Raising Capital. So we have some really interesting speakers. Of course, R.K. Kleibenstein is here, and everyone always loves hearing from him. And we have two new speakers, and that is Jeff Barnes and Kylie Dahl with the Angel Investors Network. So we're really excited to hear what they have to tell us today. And before we get started, here's our housekeeping items. If you do have questions for the speakers today, we are going to ask you to put those in the chat. Some of you have already started interacting in there, and we will hold the questions till the end. So once Jeff gets done with his presentation, we'll be answering those questions at the end, but we want to have the chat available for you so you don't forget your questions. Jeff may be answering some of them as he goes along. He's pretty thorough. And we will also have a couple of poll questions in the webinar. Please take just a quick moment to answer the poll questions for us. It does help us get to know our audience better, and we do appreciate your feedback. As always, I want to thank our speakers because, of course, we could not do these webinars without them. So big shout out to R.K. Kleibenstein and the Angel Investors Network. We're going to discuss today the new rules and regulations for raising capital, essential steps and documents that you'll need to kickstart your capital raising efforts, and how to attract investors on autopilot, which I'm really interested in hearing. I think that's going to be fascinating. So first up, I'm going to bring up RK. Hey. Hi, RK. How are you?
Hi, RK, how are you? Good morning, Iris. How are you?
I'm great. It's a beautiful day.
It's a beautiful day.
And I'm not in the path of a hurricane.
Well, I'm not in the direct path either, so we're going to call it a win. How's that?
Perfect. Tell everybody
Awesome.
who you are, your background is.
I'm sorry, you broke up.
Tell everybody who you are.
Sure. So I currently am out on my own consulting at Coast to Coast. I've been in the self-storage business for about 40 some odd years, so I'm kind of a veteran in the industry. And I met Kylie, it's probably been 4 or 5 months ago. and was so interested in what she had to say. And then Jeff came along. She made the introduction to Jeff. And I really thought it was valuable to our industry that folks learn more about fundraising, especially in this environment where it seems like some of the needs for getting deals done is predicated upon a money raise. So based on that, I thought it was really interesting that they were able to give us an education on the rules and regulations and help us to be compliant with it, because there's a lot of rogue guys out there who are raising money. I feel very comfortable that many of them are not in compliance. I've seen things that are not really, they're just offering memorandums, but they're not private placement memorandum. There's just a bunch of stuff going on out there. And I think that we're better off for our industry as a whole to do it correctly. And I think if we could use something like the Angel Investor Network to get that done, we're all better off.
Well, fantastic. Thank you for being here. And I'm going to take you off stage while I introduce our next guest. That is Jeff Barnes. Hi, Jeff. How are you?
I'm doing great. Thanks so much for having me here, Iris.
We're really excited to hear from you today. And if you could tell the audience who you are and just tell us a little bit about Angel Investors Network.
Yes, I'm going to go into more of my background here once we get kicked off with the actual presentation, so people really get a chance to know me. But I'm the chairman and CEO here at Angel Investors Network. I acquired the company in 2018, so we'll talk a little bit about that. We've been around since 1997, and we help people raise capital, and we help investors find great deals from those folks who are raising capital. So that's just a quick little teaser.
Awesome. Well, I'm going to take you off stage while I bring up Kylie real quick, and then we'll bring everybody back. Hi, Kylie. How are you today?
Doing super duper, everybody. I'm so glad to be here.
Can you tell everyone who you are, what you do with Angel Investors Network, how you got involved?
Absolutely. So I've been working with Jeff since about 2016, and then I became a partner. And I eat, sleep, and breathe business. I love helping people scale and grow and helping them raise capital. So I do a lot of the business development and a lot on the event leads. So I'm kind of a hands-on partner.
Awesome. All right. Well, let me bring everyone back. And RK, I think we have an echo. Oops. Let's see if that solves it. I don't hear it anymore. We'll get there. So Jeff, I'm going to let you bring up your presentation. I'm going to mute RK's mic for right now. I'm going to bring up your presentation and let you go ahead and get started.
Beautiful. Well, thank you so much, Iris and RK and everybody else for being here. I'm really excited about this. As Kylie was saying, here at Angel Investors Network, we eat, breathe, and sleep raising capital and helping people make their dreams come true. Now, I have a lot of information to go through because, as you guys can imagine, there's a lot of nuances when it comes to raising capital. So I'm going to dive right in. If I go a little bit fast, hopefully you guys will always have the recording. You can go back and check that out. You can check it on the live streams, of course, and make sure you put your comments in. I am going to honor our time and make sure we finish in time here, but there is a lot to go through. So really quick agenda. Of course, we're going to be talking about the rules, the process in finding investors, and stay until the very end because we're going to show you how one of our members actually raised $3.6 million in 45 days from a completely cold audience. I know people are going to be really excited about that. So a little bit about myself. I didn't join this world of raising capital naturally. I wasn't the son of some billionaire or millionaire who had a lot of money and experience raising capital. Instead, we were actually dirt floor poor, literally, and homeless at one point when I was a kid. And to my parents' credit, they persevered and worked through it. My dad was a self-employed business owner. He ran a hardwood floor company, and I got my start watching him struggle with all of that. Decided I was not going to go in follow his footsteps and becoming a business owner. That was not what I wanted to do. I wanted that safety and security and that regular paycheck. So I actually joined the Navy because I ruined my shoulder playing baseball, and that was my only dream, was to play for the Dodgers. Couldn't do that. Joined the Navy, went into the nuclear Navy, and became a nuclear power plant operator and a scuba diver. Did that for a while. Left in 2006 to join a Fortune 500 company in the financial services sector. And from there, ended up authoring 2 best-selling books, and I've been involved in over $1 billion in transactions, which include raising capital for startups, investing in, partnering with, and acquiring companies. And I've done a lot of different things, including real estate investments as well along the way. So that's just a really, really brief background. Along the way, I had to learn to overcome this fear and distrust of money and rich people. And I think that's one of the biggest challenges holding a lot of folks back, is that they still have this preconditioned programming about, hey, the root of all evil is money, right? And that's not really true. That's not the actual saying in the Bible. And a lot of folks still think that rich people are evil because, well, they only see them making out and making more, right? And I realized that that's not entirely true. And so I said, I'm going to set out on this path for personal freedom. And I joined this financial services company, raised a lot of money over the years with our capital markets and so on. And I was involved in finding and identifying early stage companies that we could invest in. So it's been a really, really long process and a very windy road to where we are right now. A lot of people have asked me, okay, how did you go from running a nuclear power plant to raising millions of dollars? And that's just a really, really short piece of it. But let's go ahead and jump into a little bit more of my background.
Meet Jeff Barnes, a former U.S. Navy nuclear power plant operator, submariner, and scuba diver, global innovation and technology director, two-time best-selling author, business advisor, consultant, and international speaker. Jeff Barnes is the go-to man for helping transform and evolve businesses. From startups to global conglomerates, no one can structure, systemize, and optimize business growth faster or better. From running a nuclear power plant to building out advanced systems for business growth, Mr. Barnes has the technical expertise necessary to expand businesses exponentially. He has worked with some of the biggest brands around the world and even shared the stage with people like John Mackey, the founder of Whole Foods, Steve Forbes, the chairman of Forbes Media, Jeffrey Hazlett of C-Suite Network, Kevin Harrington from Shark Tank, Robert Kiyosaki, former presidential candidates, and many more. After receiving an honorable discharge from the Navy, earning the highly coveted Battle E and Navy and Marine Corps Achievement Medal for his exemplary service, he worked with some of the largest businesses in the world and spearheaded global technology initiatives spanning several industries, resulting in hundreds of millions in investment capital and corporate savings. As an innovative leader and patriot, Mr. Barnes' true calling is driving results for business owners and helping them achieve their ultimate goal of building a legacy and creating freedom in their lives. As the chairman of the nation's longest established online investment club, Angel Investors Network, he's dedicated to helping his members build a legacy and achieve lasting financial freedom. He's the founder of Digital Evolution Marketing Group, and as a digital marketing expert, has had the opportunity to work with people like Percy Master P. Miller, Russell Brunson, Garrett J. White, and dozens of other celebrity entrepreneurs and business leaders. He's the author of 2 international best-selling books and is a sought-after speaker, trainer, and consultant on business growth, marketing automation, and digital transformation. His no-nonsense approach to business growth and military-style discipline has made him a highly coveted marketing, advertising, and management consultant for startups and large corporations alike. With over $1 billion raised by his clients since 2015, over $100 million in sales and licensing deals, managing multi-million-dollar advertising budgets, and more than 20 individual capital raises under his belt, Mr. Barnes is the go-to person for business growth and scaling. Jeff is not only an expert in business growth, but he's also a dedicated husband and father and enjoys giving back to his community. As a military veteran, he supports and mentors military veteran business leaders. From raising capital, implementing digital transformation initiatives, and executing hyper-growth marketing strategies, Mr. Barnes is the right person to drive your business growth.
All right, so that's a little bit about me, and hopefully that gives you guys a little bit more background about where I came from. And what I learned in my life is that money is a vehicle, and money is a vehicle for achieving personal freedom and autonomy. And that's truly what I believe in. And here at Angel Investors Network, that's what we help people do. We help them get the money or invest the money to make their lives better. And we do that by perpetuating free enterprise and capitalism. We really do believe that free enterprise is the means and the wherewithal to help people achieve this freedom and autonomy. And it's not the governments of the world that are going to fix things for us, right? It's the entrepreneurs, it's the folks like you watching this right now who are saying, I'm going to make life better for myself, my family, my local economy, and eventually the world, right? And so we do that by getting people access to capital and opportunities. And as a result, I am personally dedicated to transforming the fields of health, wellness, and wealth and personal development. Okay. There's a lot going on in those spaces, and I'm really excited about that. And where everybody here fits in is we're building wealth, right? We want to be able to do that. Now, a lot of people ask me, well, what is an angel investor anyway? I thought they only invested in startups. And I get this question a lot. Like people will ask us, hey, Jeff, I don't really think an angel investor is what I need. But a lot of people have this misconception of what an angel investor is. You see, angel investing came around in the 1800s when a playwright in New York City needed the money to go build his set, build his stage, and produce one of the very first Broadway plays. And the person that gave him the money, he said, "You're my angel. Thank you so much for making my dreams come true." So an angel investor is really a high net worth person who has a desire to invest in something other than stocks, bonds, and mutual funds, right? They have enough disposable income or wealth to be able to place their money in other areas. And so when we use the term angel investors here at Angel Investors Network, we're not talking about just startups. That's something that Silicon Valley has created to make it seem like the only way you can be an angel is if you're investing in a startup. That's not the case. And I hope you guys understand that an angel investor is someone who has the money, the wherewithal, and the desire to invest in something other than just what their financial planner is telling them to do. Okay. And they invest in things like startups and private equity and venture capital and oil and gas, energy products, almost anything that you can think of that is not stocks, bonds, and mutual funds. All right. So let's dispel that myth right now. You can go get an angel investor for investing in self storage, investing in your business, investing in roll ups to help you get a larger business if that's what you desire. Okay. Now we're going to talk about the three cardinal sins really quickly of raising capital. You see, when I work with a lot of folks that are raising capital, whether they're raising their first million or their first 100 million or $1 billion, the biggest challenge that we see is that they love to talk about their products and their services. They love to sell the investor on how great their widget is, how great their self-storage facility is, how great their building is. You don't do that. Okay. We'll talk about why in a minute. And if you make it all about you and the numbers, you're really missing the point. Okay. You have to remember you're dealing with people. You're dealing with individuals who also have dreams and aspirations and goals. Okay. So we need to keep that in mind when we're raising capital. And if you are not following a proven process and you're just shooting from the hip and hoping that it all works out, then you're more than likely not going to succeed. Okay. So we're going to talk about how we fix some of those. So the first thing is let's stay out of trouble. RK mentioned this in the very beginning. There's a lot of folks out there that are talking about how to raise capital and what to do. And hey, just put this document together and you'll go get money in the door. There's a lot more to it than that. And there's this big, hairy organization out there with a 3-letter acronym called the SEC, the Securities and Exchange Commission. And guess what? They want to make sure that you do things right. Now, I realize that a lot of people get scared when they start seeing the SEC or the IRS or FINRA or all these folks talking about how you can go to jail. Now, I do not look great in orange, in my opinion. I do not want to be in prison. So I always make sure we follow the rules and we're very ethical about what we do. And sometimes I am transparent to the point of losing investors because they're scared that they could lose all their money. But if I don't tell them that, and then it does happen for one reason or another, that's a bad place to be, right? So I truly believe that you get empowered by having the education, which you're here to do that today, the experience, going out there and putting it in place or working with others to do it, and exposure to new things, new ideas, new opportunities. That's how you become empowered and get the confidence to go out there and do what you need to do. So let's talk about some of these rules, all right? Let's understand just the basics. I don't have all day to go into every single one of these details. So the important thing you need to understand is the Securities and Exchange Commission regulates anything when it comes to securities. In other words, investments, okay? Everything from raising your first $1 million into your company to going public, okay? And we have we have these regulations because of the Securities Act of 1933, when people started taking money unscrupulously from unknowing, unwitting patsies, essentially, these investors who would give them their life savings. They would then go put this into the stock market using margins and calls and things like that. And then when the stock market went down, these people lost everything. So the government said, hey, we need to protect people and their wealth because guess what? Since they don't know any better, they're getting taken advantage of. And we do not want that. Okay. So it's really important that you understand where those rules came from so you can understand why they're in place and why not to skirt the rules. Okay. It's very important to understand that. Now, Section 4 Alpha 2 is the one that talks about a lot of private placements and raising capital for your private venture. You don't need to read all of it. Just understand there's a lot of exemptions from what we call public registration. In other words, when a company goes public, they get listed on the NASDAQ, the New York Stock Exchange, and so on. You and I can go and just buy stocks through a broker, no big deal, and then we own the stocks, right? When you are a private company, whether you're doing private real estate investments, you're doing a private placement into a private equity fund or a new company, those are not registered so the public can get access to them. So instead, they created these exemptions. We call these Regulation D exemptions. So the two most common Regulation D exemptions are 506B and 506C. There's a lot of others that go into this, but what they say is you're allowed to either go after accredited and non-accredited investors, with a non-accredited investor being someone who doesn't make 200K per year or 300K per year if they're married or have a net worth of $1 million, excuse me, excluding their personal residence, right? So if you're not accredited, you can only invest in a limited number of opportunities. Now, let's be honest, most people who are not accredited also don't have a lot of money to invest. So we need to be very careful when we're working with unaccredited, non-accredited people. 506B allows us to bring 35 non-accredited people into our investment opportunity, okay? But only 35. 506C, you can't bring any non-accredited investors in, but you can do this really cool thing called general solicitation. In other words, I can advertise for you and we can say, hey, this person, John Doe over here, is raising $5 million into their fund. Would you like to learn more? With 506B, you cannot do that. With a lot of exemptions, you cannot do that. You have to go with the people you already know and have a pre-existing relationship with. That's really important to understand. Then we have these things over here on the right called Regulation CF and Regulation A+. Regulation CF, you've probably heard about crowdfunding from the Jobs Act in 2012 and then modified in 2016 to start allowing these platforms to come out. We have the ability to go out there and raise up to $5 million in any 12-month period into an opportunity from an unlimited number of non-accredited investors. But you have to be on a regulated platform to do that, okay? So it's really important that you go to a regulated platform to do all this. If you're not on a regulated platform and you try and generally solicit and bring in non-accredited investors, you could end up in trouble. Regulation A+ is what we call a mini IPO. There's two tiers. There's tier 1 is 20 million, tier 2 is a $75 million limit in any 12-month period. We call it a mini IPO, and most people will not do this unless they're trying to raise massive amounts of money from a lot of people. Now, why would you do that? Well, you want liquidity because you're going to be eventually listed. You're trying to get uplisted to the NASDAQ, to the New York Stock Exchange, to the Canadian exchange, whatever the exchange is, and you want liquidity. You want as many investors in there as you can so they can buy and sell your securities. So Regulation A+ allows you to raise a lot of money so you can eventually go public. That's generally where we see a lot of folks using that, okay? So those are the basic rules. Now, how do you gain the experience and the exposure? Now you have the education, really, really basic, right? So go and research more of this, of course, but how do you get that exposure and that experience? Well, we always say it's best to partner with people who have gone down the path that you've already gone down or you want to go down so that you can get that exposure from them, right? You can learn through osmosis, but you can also learn by watching them in action. You can start working with them. We really encourage leveraging mentorship. So if you're part of SBOA, I already know that RK and Iris, they have a great program here, and you guys are learning a lot from them, which is amazing. Make sure you stick with it because that's how you get that exposure. And if you get practical exposure, in other words, going out and raising capital yourself with somebody else, that's how you're really going to get into the middle of it. You're going to understand exactly the psyche of an investor, who you're talking to, how to talk to them, what to say, what not to say, and so on. Okay. So the key question to ask is, who has the experience, the network, and the access that I lack? If you are struggling to raise capital right now, or you need money for your next deal, this is the key question you should be asking. Okay. Now let's talk about the step-by-step process to raising capital successfully. Okay. We want people to say, hell yeah, I'm in, right? We don't want people to waffle back and forth and I don't know, and bring up every objection under the sun, and then eventually just walk away and waste your time, right? So we want you to make yourself so attractive, yourself and your offer, so attractive and compelling that an investor says, yes, I'm in, where do I sign? Okay. So this is how we do it. We start off by not being that guy, right? The sleazy car salesman from the 80s, the 90s that's saying, hey, here's all the incredible things of why you should buy a car from me and all that. There's a certain level of decorum and respect and tact that is expected when you're talking about somebody's money. Okay, you can get away with a lot of different things when you are trying to sell a tchotchke or something small. If you're doing an info product, if you're doing an infomercial and selling a pot and pan set, yeah, you can be over the top, flamboyant, whatever. You need to do that in some cases. When you're talking about somebody's money, you have to be really respectful of the fact that they worked hard to earn this. And as a result, they are not just going to risk it because you want them to. And you have to realize raising capital is a lot like dating, right? Think back to going into the bar and seeing the guy or the gal, or going to a networking event and seeing that person you really, really want to talk to. I bet you didn't go right up to them and say, hey, you look amazing, want to get married, right? No one's going to do that, okay? A lot of folks will do this when trying to raise capital. The very first conversation they have, and it's really cringeworthy, is, hey, you look like you have a lot of money. Would you like to invest in my deal? Do not do that. They will run to the fences as fast as they can because they don't want those people in their lives that are just coming with their hands out. Don't do that. Don't be that person. Instead, build rapport the right way. Okay. Don't sound desperate. Don't sound needy. Don't get greedy, and don't be arrogant. Okay. You need confidence, but you need to build a relationship first. If you build a relationship before you ever start asking for money, you're going to be a lot better off. Okay. Remember, they're not looking for a friend, though. They need a trusted partner. So how do you build rapport? Know thy customer. We hear this in marketing and advertising all the time. If you don't know who you're pitching to or who you're talking to, you'll never build that rapport. So you need to know who they are. What are their hot buttons? Okay, what are the things that make them tick? What's their motivation? I'll give you a hint. It's normally not making more money. Okay, the people who are out there looking for a way to make a quick buck, you don't want them as investors because they're going to be the biggest pain in your side, and they're desperate. They're desperate to make more money with the little that they have. So don't go after those people. And then the real key here is follow up, follow up, follow up. No one likes to be forgotten. Okay. And guess what? You can do all of this automatically, and we'll show you how to do that. Okay. So once you've built rapport and you've gotten to know them, you think that they're a good fit, then you want to offer them an opportunity to look at your deal. Okay. You're not being desperate. You're not being greedy. You say, hey, I have this incredible opportunity over here. Would you like to take a look at it and learn a little bit more? It's important you have your documents ready. So what documents do you need? Well, like RK was mentioning, you need this thing called a private placement memorandum. I've seen these up to 200 pages long, and they are essentially a CYA. And the very first 3 pages generally says, you can lose all your money. There's a possibility you can lose all your money. It's likely you could lose all your money. Oh, by the way, you're probably going to lose all of your money if you invest with me. Okay. And a first time investor, when they read that, they get freaked out. So you need to understand that this is a legal requirement to protect you, not because you're telling them you're going to lose all their money. Of course, the rest of those 100 pages is to explain how you're going to prevent from losing all their money and make them feel good about it. But you have to tell them, and this is more for you than it is for the investor, there's a chance you could lose all your money. And the reason you want to tell them that is because if you do, let's just say you buy a property, a hurricane comes through, wipes the whole thing out, you didn't have the proper insurance, all of a sudden you're down to level dirt and nothing to show for it, and you have all this debt that you owe an investor. Well, if they come back and they say, hey, I want my money back, they could technically sue you, and most of them will. Okay, if you lose all of their money, they will actually come after you. I've done this with people I've invested in. And if you don't have a legal leg to stand on because you didn't give them a PPM, you could be in a lot of trouble. Okay, so you don't want that. Basically, a term sheet is, here's the terms of the investment opportunity. Here's how much money we're raising. Here's what we're offering you for it. Here's the type of exemption we're using, and so on, right? Step by step, bullet by bullet, okay? A subscription agreement is, are you ready to invest? Sign the dotted line, tell us how much you want to put into it. That starts the process. And of course, you want to show them your business plan, your projections. We also call them pro formas. Show them credibility, show them proof. Prove to them that you're for real, okay? It's really important you do this. And there's a whole bunch of other financial documents, and we'll talk about your capital stack in a little bit because capital stack is really important. So again, the PPM, we've kind of already talked about this. So, we're not going to belabor all these different things individually. Again, the term sheet is the terms of the investment. It's generally part of the PPM, but you can send that independently as well. And then the subscription agreement is the questionnaire and the place where they actually sign to say, yes, I want to invest. They should not send you money until after they have signed an agreement. Okay. Really, really important you understand that. We did an event several years ago, and we put all of our companies on stage and they got a chance to watch. Well, we didn't get back to the booth right after that because we were doing a photo shoot. And apparently this person who was in the audience really liked one of the opportunities. So when we finally got back to our booth, we found a $150,000 check made out to us from a guy who said, I really like this company. Please, take my investment. Obviously, we went through the legal route to make sure he signed the subscription agreement before we brought the money in. And that's a very, very rare exception. It doesn't normally happen, okay? But just realize that you have to have these documents ready. If you don't, you're going to look like an amateur who doesn't know what they're doing. So make sure you have everything ready. So when somebody says, yeah, I'm interested, you can send it to them, okay? So the next thing you need to understand is you do need to file with the Securities and Exchange Commission whenever you're raising capital. If you're raising $1 million or more, you better be doing this, okay? Sometimes you can get away with forming what we call just an SPV, a special purpose vehicle, where all the partners put the money up together. In that case, you don't need to file with the SEC. You're essentially just all attributing your money, your capital, your time, your expertise to form a new company together. That's a partnership, right? An LLC, a partnership, limited partnership, whatever. When you're raising capital from multiple sources outside, people that you don't necessarily know and they're not going to be running your company, you need to file with the SEC. So the first thing you do is you get what we call a central index key from the SEC. An attorney can do this for you. It's not very, very difficult, but you got to do it the right way, of course. And then once you've gotten that, only then can you go issue what we call a Form D, which says, hey, I'm raising capital. Here's how much we're raising. Here's the terms and all of that. And you do have to you do have to submit these forms per state as well. Each state has its own individual investment regulations that you need to look into. Okay. A Form C is for crowdfunding. So you say, yes, I'm raising capital. And you have to do this within 15 days of getting money in the door. Okay. For all of our capital raises, we make sure we do this before we bring in any money, because otherwise, if somebody wants to look you up on the SEC's registry, which they can, and they don't find you, not a good look, right? Okay. So step 3 is becoming a money magnet. And let's face it, raising money takes time and effort, but I'm going to show you how to almost effortlessly attract investors who are eager to fund your project, your deal. Okay. So in order to become an attractive opportunity, you don't just go pitch everyone you can. Okay. Again, makes you look needy, makes you look desperate, makes you look greedy, makes you look like an opportunity people want to stay away from. So instead, you have to stand out as the best investment option out there for anyone you talk to. So we create what we call our unique selling proposition for investors, which is, why should I, your potential investor, put my money with you over and above every other opportunity available to me, including doing nothing with it at all? Most people have never spent the time to think about how they would answer this question. You need to, if you want to raise capital, because then you're going to start thinking about all the objections, all the reasons they wouldn't do it, and you'll be able to answer those. What are those critical questions? If you're not clear on your investment structure, if you're not clear on your business plan, if you're not making it easy for them to understand, they're going to be confused. A confused mind never buys or invests, right? So you have to understand that. The next is demonstrating value. How are you going to get them their money back? Why is this a great opportunity for me? Guess what? Most people want you to mitigate the risk before you make them money. How are you going to protect the downside? If you've ever listened to Warren Buffett, number 1 rule, don't lose the principal. Number 2 rule, look at rule number 1, right? Never lose money. That's really, really important for anybody who's going to write you a check. They want to know that you've thought through as many scenarios as possible about how you're going to eliminate the risk, up to and including insuring yourself. Like key man insurance is really important. Really important that you have this stuff figured out. So let's talk about our ideal investor triangle. You need to create what we call the right offer, right? We need to know what that offer is. You have to be absolutely clear on that. But then you need to go find who is the right investor for this type of investment opportunity. We talked about angels before. A lot of people think an angel only wants to invest in a startup. Well, guess what? The average person who invests in a startup will do 1 to 3 deals maximum in their entire lifetime when it comes to investing in a startup. So what do they want instead? They want cash flow. They want appreciation. They want tangible assets. They want collateral. So you need to figure out, what does the person look like who would really like my deal? What are they doing? Are they retired? Are they a business owner? Are they a teacher? Are they somebody who has millions of dollars in their 401k? Or are they just getting started and they want to maybe partner on doing this themselves, right? So there's a lot of questions you need to ask. And then you need to bring it to them the right way. What does the right way mean? Well, you need to go and approach them in a way that's going to be meaningful for them, right? Again, you don't just show up and start pitching people right away and talk about it. And in order to do this, you need to do it at the right time. So we also call the right way the right media. How do you get in front of them so that they're going to actually spend the time to look at, watch, read, and whatever? Okay, now the capital stack, I'm going to go through this relatively quickly because there's a lot here. And when you're raising big money, you're going to go after more than just private investors. Okay, so private investor, angel investor, they're synonymous. One of the things we talk about is senior debt. This is like your banks. Okay, they are going to go ahead and invest, and all they want is a monthly payment every single month. They're not going to get any dividends. They're not going to get any ownership, right? It's generally a loan with fixed payments. You might have a balloon payment at the end. Then you have this thing called mezzanine or junior debt. This is debt that's like a second loan, a second lien against the property. It's going to be a higher interest rate. But again, they're not getting any sort of ownership in your deal. Okay. And we do these types of things because guess what? It's a lot cheaper capital. And there's a lot more of it out there than most people realize. It's actually infinite in the grand scheme of things. Then we have this thing called preferred equity, which is these are the people who are going to want some sort of distributions from whatever your profits are. And they don't get really any voting rights necessarily the way you can structure however you want, but they generally don't get any voting rights, but they're going to get repaid more than likely before you do in the event that something happens, right? So a good example would be you buy an apartment building or you buy a large self-storage facility. All of a sudden, economy turns, you can't make your money back, you can't pay off your debts. It's getting foreclosed on by the bank, the senior debt. Well, guess who gets paid first? It goes from the bottom to the top. And guess where you are? You're at the very top. You're common equity. Okay. You generally have the highest risk, but you also have the biggest upside potential because you can reposition your property, you can fix it up, you can put it in, you can start raising rents, you can do whatever you need to increase the NOI on that. And as a result, it becomes worth a lot more. When you sell it, guess what? You get the lion's share, but you still have to pay off everybody else below you first. Okay. Really important. So just a really, really quick example, if you're doing $100 million acquisition, whether this is a real estate acquisition, it's a roll up, you're buying a company that has a bunch of these, this is generally what it would look like. And what we encourage people to do is actually go try and figure out the senior debt piece first if you're doing a big deal, because they will loan 60, 70% loan to value against real assets. But if they're going to say, nope, we wouldn't do this deal, it generally means it's not a great deal in the first place. Okay. Because if they're going to say no to a really big deal, then first off, you have to go and try and raise all the money yourself from private sources. That's a lot harder. Okay. These companies, these commercial banks, these institutions, and these bond issuers, this is what they do for a living. So they know how to underwrite it and look at the risk really quickly and can help you. I'm not going to leave this screen up for a long time, so take a picture if you want it, but just realize there's a lot of different opportunities in place to raise capital. You can go to a bank, you can get private placements from the private credit markets, private investors, and so on, and you can go to the public bond market, and that's generally when you're raising lots and lots and lots of money, okay? Folks, I can't stress this enough. There's more money out there than you could possibly imagine, and it's there for the taking for the right people. But you've got to get your mindset around the possibility that you can do that. Okay. Now, how do you do this? Well, you've got to follow up. Once you find somebody who might be a good fit, who might be interested in it, they want to know that you're for real. If you say you're going to follow up, you better. If you say you're going to call them on Friday at 9 a.m., you better call them on Friday at 8:59 a.m. Okay. The reason why is because subconsciously, not necessarily consciously, but subconsciously, they are testing you. They need to know that you're going to show up. We have this thing called the 7-4-11 rule in marketing, which is 7 different touch points, 4 hours of interactions, and 11 different sources of media. In other words, email, phone call, text message, in-person meeting, dinner meeting, things like that. This is required for a lot of people to make a buying decision. And Google has done the research. They say that it takes upwards of 500 different interactions for somebody to finally make a decision whether they want to buy something of any means. So think about that from an investor's perspective. If you go to somebody who's never even heard of self-storage investing, and the very first time you talk to them about investing, you caught them completely off guard. They have no idea what they're talking about, you're talking about, and they're going to say no. Their guard goes up instantly. They resist it. They don't want to talk to you about it. It sounds risky, all the things. So realize that's going to take a lot of touch points to get there, which means you have to have a follow-up process in place. And hopefully I'm not missing any important questions right now, but if you guys do have questions, make sure you put them in the chat. We'll go back to those at the end. Okay, so first thing you got to do, create an investor pipeline. You need to have a way to organize this. I don't want just sticky notes all over the office because guess what? You go on a trip to go visit a property, go talk to somebody, and you say, oh man, I forgot such and such sticky note or the business card. You got to have a CRM. You got to have a place that you can put all these things so you can keep track of them. Create an ongoing outreach program. We always mentor our students and our clients. You got to have a way to just automatically follow up. Create newsletters that go out every month. Write the email, write the newsletter. You can send it out automatically. It's not a big deal. It's actually really simple to do. And it could take 20 to 30 minutes every month to get this done. Okay, but you need to let people know that you still exist so they don't forget about you. If they forget about you, they're never going to invest, right? Continue to provide ongoing updates and engagement. It's really important to do that. And when you get somebody who's interested, but then they say no, always ask this question. What would make this deal a 10 out of 10 for you, right? If you're interested, but you're saying no, there's got to be a reason. Tell me why you don't like it. I'm not asking you to invest, but why don't you like this deal? What would make it better? You're going to gain a lot of insight from that. Okay, so I went through that really, really fast. Go ahead and start putting all of your questions in there. I want to make sure that we're answering as best we can. So I'm going to ask you guys, would you like help finding your ideal investors, pitching them properly, and closing more deals? If you really want that, do me a favor, say yes, say me, say I, put it in the chat so we know, because we want to make sure that, there's a lot of information here, but we want to make sure that you're getting everything out of that and you have a system to go make this happen. So if you guys are interested in this, then let us know. Go ahead and put it in the yeses and all of that. Okay.
Hey, Jeff,
Question,
wanted to ask you a couple of questions. How does the current environment we're in with negative leverage, how does that affect raising money through angel investors, where our debt costs are so high right now that it costs us more to borrow money in some cases than we're paying in pref returns, for example?
It's a great question. I actually got this question. It's ironic. I was at an event on Friday night, and at this event, we're surrounded by luxury exotic vehicles, Lamborghinis, Porsches, Rolls Royces, and private jets and private helicopters. And we're sitting there with about 500 people. And we're all talking about this. And a lot of these people have raised hundreds of millions. Some of them have funds doing in the billions of range. And they're asking the same question, right? Like, oh, well, it's really, really hard to do this. It's like, it can't be as hard as you think if all of this stuff is we're surrounded by all this incredible stuff. And guess what? These are people's private vehicles, right? They brought it in. They're private planes. They brought it in. So the trick to understanding this and answering this properly is that there's always a source of capital. There's over $3.7 trillion in dry powder right now, just in private equity. Corporate debt, corporate dry powder is even more, right? And then you have people's retirement plans and 401ks and IRAs and so on. And so what you need to understand is that there's a lot of noise and news out there telling people everything's going to hell in a handbasket, right? But there's always people still looking for opportunity. So what you have to be really good at is understanding that the way that the debts are being structured may change, right? Instead of them doing a 70-75% LTV, they might only do 60% at the banks. Okay, if they're only going to do 60%, how do you structure it so that it still makes sense for you? The debts are definitely going to be more expensive for sure, right? When we're in higher interest rate times, there's going to be a lot more money that's being paid. But guess what? Bond yields are still low. So how do you structure it so you maybe can go get a bond? Or you go to those private individuals and say, hey, you're making 1.5% per year on a CD. What if you made 8% and it was secured by real leverage, real estate, right? You had some tangible asset there. There's ways to structure it. It again just goes down to who are you talking to and what's the message you're conveying to them. Because whenever you're raising capital, the first thing you have to be is optimistic. You can never say, oh, well, the industry is really hard right now and the rates are really high right now and no one wants to invest in me. You're right. If you have that attitude going into it, no one's going to invest. So instead, you have to curate. And what I like to tell people is you're always digging that well before you need the water. So if you're out there and doing deals and making things happen, guess what? It's hard for everybody else too. Everybody else is saying, hey, no, I don't want to touch this because it's too hard for me to get money from the bank. Well, great. That means there's more opportunities as well, right? I believe it was Rothschild that said, you make money when there's blood in the streets. In other words, when everything else is going down, that's when you should be investing and you should be taking advantage of that. So it's a matter of how you look at it, and there's opportunity everywhere.
Point, Jeff, and I think it's Warren Buffett who said that you don't buy when the market is high, you buy when the market is low, right? And you ride it on the way up. So I think that's great advice. Second part of that, Jeff, is one of the things that I would encourage people to do in today's environment. Of course, rates are hopefully coming down and will continue to come down after this week's message of a half a point lowering. But it's possible now that you may want to raise 100% of your money in equity as opposed to using debt right now to do that because of the cost of debt. And you may have a pref payment that's actually lower than what it would cost you to go to the bank to do it. So that makes your money raise an even more integral part of how self-storage could be put together with an angel investor, and limit the amount of equity as an investor you have to put in. The second part I'd like you to help us to understand, Jeff, is there's a number of gurus out there in our industry who are pumping up their organizations and saying, look, you can come to me and I'll help you to invest, and you don't need to put, using other people's money 100%. You don't need to put a penny of your own money into it. You just put a little of your hard work and whatnot, and you sell the property to these folks, and you don't have any of your own money at risk in it. A lot of these folks, unfortunately, don't really have any true self-storage experience, and there are some out there who are very credible and have done a great number of self-storage projects. How can we understand the benefit of using an angel investor who doesn't have necessarily any self-storage experience? How do we set them apart from these gurus who are using, help me with the word that they use, the mastermind programs, so to
Right.
speak, to raise money and put deals together? Could you explain maybe a little bit about that, Jeff?
Yeah, so I think, if I'm understanding what you're asking there correctly, RK, is, how do you make sure that if you're new to this industry, you can still succeed, and especially raising private capital? Well, the way that I look at it is that anybody who actually has any means and they have enough money to invest in something, they're betting on the jockey, not just the horse, right? So if you look at self-storage would be the horse in this case, and could be a great property, great opportunity, great everything. However, if you have zero experience running self-storage, then I would be very reticent and unlikely to invest. Okay. And as a result, that's why I say it's really important to partner with people that have incredible experience. So if you're familiar with the book Traction by Gino Wickman, he created this thing called the Entrepreneur Operating System, EOS. There's always the visionary and there's always the integrator. Okay. And the visionary is generally the person who's charismatic, who has this great idea and all this amazing stuff that's going on, but they probably can't even log into their Google Calendar to set up an appointment and get a Zoom call going, right? And we all know those people, but we need them. They are essentially your salesperson. They're the ones that's going to go out there and help. And a lot of the folks that are getting excited about getting into a new industry, whether it's self-storage or multifamily or fix and flip or whatever it is, they're like, I have all this energy and all these ideas and everything. It sounds great. However, I don't have the experience, but I really want to just dive in with both feet. The number one thing that I recommend people do is you partner with somebody else, even giving up the lion's share of the opportunity, who has the experience that you lack, so that you can go out there and talk to the investors. You have to know enough to be able to talk to them, but you need to have a really great bullpen, the team behind you that's going to make this thing succeed. Because if an investor looks at you and says, hey, sorry, it looks like a great opportunity, but why would I do this with you? And you don't have a great answer for that, then of course they're going to walk away. So I think that's the best way that I would go about it. And hopefully that answers your question.
Yeah. And Jeff, that's a good point. That's one of the things that when I coach people and talk to them about their own self-storage project, is they need to ask, what do I bring to the table? Because an investor could go out. I watch a lot of Shark Tank. That's my very favorite show. I watch it every night, and sometimes it's just the repetitive over and over again, but the same questions and the same theories are there. And that is, hey, an investor could go out, find a real estate broker who goes out and finds the property. They can find a bank to go do it, and they put their own money into it. And the thing kind of comes together with a lot of professionals, consultants, etc. Why do I need a developer and pay you to put it together? And so that's why I always say, look, you need to have the expertise to put this transaction together, to find the right management company, and to put the transaction in a position where an investor has confidence in them. All those things that you said about the angel investors need to have in place in the developer or the sponsor of the transaction to get it moving forward. So I think that's great advice for self-storage, either wannabes or already that are there that are looking to grow their platform and move from maybe 1 or 2 properties to 5 or 10 properties. And
Yep.
I think this is a tremendous opportunity for those owners and developers to explore being able to expand their markets now. And as interest rates come down, we're going to have more and more opportunities to look. In our industry right now, Jeff, one of the most critical paths that we have are going to be what we call certificate of occupancy deals, where the construction risk is now taken out of the equation. These stores are getting open. A lot of these properties the pro formas were done 3 and 4 years ago when interest rates were programmed at 5% or even less. Now those rates are 8% or even higher. And the interest reserve that was originally set aside is going to get burned up long before the property's cash flow to make the debt service. That's going to put these properties in play because many times we don't have the opportunity to go back to our investor base because the opportunity fund is closed. We can't go back to them and say we need more money to keep this going, and the sponsors don't have enough cash to infuse into it to keep the process going. So that's going to create a huge opportunity in the next 18 to 24 months as these properties come to that inflection point where they're no longer able to go back to their reserves to service their debt. And if interest rates don't come down enough to do that, it's going to create a lot of opportunities. And this is where angel investing could be a very, very big play for people in our industry. And if you know of those projects in your market or in markets that you're interested in getting into, this is where I think, Jeff, an opportunity to talk with your group would be very, very valuable to folks like myself and people that I work with on the feasibility side of the business, not only from a development perspective, but also from an acquisition perspective, in being able to build a scalable business plan and make it work. So I want to say thank you so much for the information that you gave us today. Iris, thank you so much for putting together this opportunity for people to learn. And I hope everyone, I'm going to step aside so we can answer some questions. But gosh, Jeff, I really want to thank you so much. And Kylie, thank you for helping us put this all together because I think there's some really valuable information here. And I would encourage every questions, please get them into Jeff and continue to send them to Iris because we can get the questions sent even post program here out to Jeff and Kylie so that they can get back to you and help you to understand the process.
Absolutely.
Thank you so much, RK. Thank you for being here. And as always, your input is always very valuable. We love seeing RK in our webinars.
Yeah, I just want to add something onto that, to what RK was saying. You're exactly right, RK. And that's not just in the self-storage space, but there are a lot of industries where people got loans when rates were 2.5%, 3%. And now they're about to reset and they can't make it cash flow. And so there's going to be a lot of opportunities in a number of real estate sectors that are going to reset. And this is a great time for people to really be, what we say is, digging your well, right? We already talked about that, but starting to build up your war chest, if you will, right? Go out there and learn the process of talking to investors and tell them what you're working on, what you're planning, and what you're doing, not with a sense of getting money today necessarily, but how do you go out there and create these SPVs and these partnerships with potential investors so that when an opportunity does arise, all you have to do is make what we call a capital call and the money's there, right? And so the cost of capital is a lot higher when you're raising equity. We all know that. You're giving up a piece of your company, which means you're giving up a piece of the future earnings and future appreciation. But if that's what it takes to get in the game, realize that you could have a really, really big piece of a small pie, or you can have a smaller piece of a really, really large pie. It just depends on what you want the most.
Yeah, absolutely. And I do want to just jump in and remind people that we have a couple of poll questions, just two. The first one, if you can, when you put in your answer, just put number 1, was what method have you primarily used to raise capital for self-storage projects? And Jeff, it looks like from the answers that we've gotten so far, most of them have said private investors. And then poll question number 2, which part of raising capital has been the most challenging for you? And so far, it looks like it's sort of a mix between finding investors, and then Suzanne also said structuring appealing deals. Can you speak to the structuring of an appealing deal a little bit, Jeff?
I can, and it comes back to what I was saying before, which is an appealing deal depends on the person you're talking to, right? If I go and I talk to a family office and I tell them that we can make an 8% return and we'll just give them debt and I need to raise $5 million to do this, they're going to say, no, why bother? Why waste our time? Right. And the reason why is because they deploy 50 million, $100 million at a time, and they're already earning 12, 20% IRRs on their different opportunities because they know what they're doing. On the other hand, if I need to raise $5 million and I can only afford to pay an 8% return, maybe I go to the folks that have an IRA or a 401k that they're scared to put into the stock market right now, even though they've been told their entire life you can earn 12% inside the stock market. Well, if I go to this person, I say, hey, not only will you get 8%, you're going to get cash flow. You're going to get paid every month or every quarter. So you're going to see it's for real. You're going to start getting money back within 30 to 90 days. And on top of that, you have access to this asset so that if at any point we can't make the payments, we can sell this asset and make you whole, right? So that's how you create an appealing offer. It's not about the property itself. I mean, you do have to make sure it cash flows, right? If you go out there and you commit to buying, you make the money when you buy, right? If you commit to buying a property that you're not going to be able to cash flow at any rate, well, why would you do that unless you have a really, really good reason to do that? Like maybe you buy a property that has an extra 2 acres of vacant land that you can then use and start selling off storage for boats, trailers, and RVs and so on, right? That's an opportunity as well. But you have to be the visionary to understand that. On the other hand, if you're structuring a deal and you say, I'm right at the limit, I'll barely break even on this one at this given rate, if anything goes south, you're really at risk of losing the deal, losing the opportunity, and investors are going to see that, right? So you have to know who you're talking to in the first place, and you have to know what your projections are based on realistic opportunities and ideas.
Great. And so I think, we'll hear a lot that the most challenging for most people is finding that investor. And how do you help people with that?
Well, I have an entire program, and we don't have a lot of time left to talk about the entire program, but we cover all of this in what we call our Capital Raisers Academy. And what we do with this, and it's a year-long program, it's a six-week masterclass plus coaching for an entire year, plus our software, plus our CRM, plus everything else. And the whole goal is that, you're right. A lot of people, they love going to the seminar. They love getting hyped up. They love learning about the opportunity and all of this stuff. And then when it comes down where the rubber meets the road and they say, oh, okay, by the way, I need $1 million, $2 million, or I need 500K. The first time they find out a bank's not going to finance 100% of the deal, they freeze. They're scared. And so the reason they're scared and they're blaming everybody else, they're saying, no one told me about this. It's because they don't realize the money's in their own backyard, right? There are so many sources of capital, so many private investors. I can't remember the author of the book, The Millionaire Next Door, but it's so true. People have money everywhere you go. It's just a matter of how do you find them. And that's where marketing comes in. And we have an entire tool using our LinkedIn program. We call it Link Generator. So we can actually start helping people build up an investor database quickly and easily where they're going to start having phone calls within roughly 7 days. And it's not too terribly difficult, but it comes back to the first question, which was, well, how do I have an appealing offer? Well, once you figure out what the offer is, once you figure out if it's going to make sense, then we figure out, okay, who's the right person to invest in this, right? So it's marketing 101 to a certain extent. That we go back to that triangle and our unique selling proposition. And then we say, okay, who is the right person for this? Great, let's go find them. And we have an entire process. And I would strongly encourage people to start talking about it, updating their social medias, looking at their Facebook connections, talking to people at networking groups, going to the local networking groups, the BNI groups, and even the angel groups, right? And learning who is who in the community. And then from there, use LinkedIn, start building up a bigger network and database, following up with people regularly, setting up coffee dates, getting on Zoom calls, whatever it takes. Start building your well and reaching out to people right away. I'll tell you, when I first started trying to raise capital for my real estate deals, I would have panic attacks. Okay. I would literally freeze and I'd blank out and I couldn't think of what I was going to say. I'd have a panic attack right there. There were times I had to cancel meetings because it was like right before, because I was so scared to even go talk to anyone. And the only way you get over that is by doing it, right? And how do you do it without having to worry about risking everything? Don't need the money tomorrow, right? Go out there and start having these conversations today, getting to know people. One person is going to lead to the next, to the next, to the next, to the next, right? And so that's the way I would encourage people to go about it.
That's awesome. RK, did you want to add anything there?
Yeah, I just wanted to say, look at Jeff's background, and if a guy like that could have a panic attack over it, you know that it's a really big rock to push uphill, right?
Yeah, it's ironic, right? I talk about this a lot, because I do a lot of coaching as well. It's mindset, right? I was capable of going down into hundreds of feet of water, as a scuba diver and risk, things getting ripped off, because that's how they train you. They rip all of your gear off while you're underwater, and the only thing you cannot do is freak out and shoot to the surface. You'll die that way. So you have to learn to operate under pressure, literally under pressure. And yeah, raising money is a different thing. It's a different skill set. So you can't be great at all things, right? And so it does take those incremental steps towards confidence.
Yeah, that's great information. And everybody has their own set of kind of fears that keep them from reaching out in different situations. I know I used to work with an entrepreneurship center at a local college. And so we were teaching people how to do their elevator pitch and that same kind of thing. And I think it's just a matter of getting people used to being their own best marketer.
Yeah. And own it, right? A lot of people, I hate the saying fake it till you make it, because a lot of people have said, okay, we'll just essentially lie. Well, you don't want to do that, right?
Yeah.
Instead, you have to speak it into existence. So you become the person you want to be, who would be able to raise the capital. There's a lot of ways to go about that, but a lot of it, the very first module inside of our masterclass is all about mindset, because if you don't have that right, you're never going to get to the next step.
Absolutely. Oops. Let me bring RK. There we go. Sorry, RK.
One of the things I would also add to this is that you can't really soar with eagles if you surround yourself with turkeys. And, choosing professionals and professional organizations like the SBOA to help guide you through this process. And that's why I think groups like the Angel Investors Network that have really high quality people that are attached to them, like Jeff and Kylie, will help you as a neophyte or even as an experienced self-storage owner and operator to navigate these very difficult waters. You may be the very, very best self-storage operator in the world, but you may not be the best at certain things. I know I do things I think very, very well. I am not a great money raiser. That is not my field of expertise. I am not an SEO guy. If it's an SEO issue, I'm going to go get an SEO professional, because I'm not a millennial. I don't get that whole thing. It's expertise I do not have, but I know a guy. And that's the most important thing, is you got to know a guy, right? You know where to go get the expertise. And I don't think Ronald Reagan was the most brilliant man in the world, but he surrounded himself with the most brilliant people in the world. And that's what made him so great, was the fact that he leveraged other people's expertise, which made him really, really great. And that's what I think is a lesson to learn from all of this, is that you don't have to have that expertise, but you need to know how to get that expertise. And if you surround yourself with the right people and you have the right attitude, I firmly believe that that'll allow you to execute. You'll be able to get to where you're going from that, whether it be from the feasibility side of it, which is near and dear to my heart, the expertise in self-storage, groups like the SBOA that can help you to reach out, whether it be a debt component, a management component, whatever it might be. We can put all that together, but when it comes to the money raising part, this is a really important component of it in the capital stack, whether it be the debt side of it or the equity side of it.
Yeah, absolutely. And we are getting short on time here. Jeff, do you have some parting comments you want to leave with everyone?
No, I think that we've covered a lot today. There's a lot more to learn, and there's obviously a lot that you get into. So what I'll do, Iris, you guys have a copy of our presentation. You guys are more than welcome to share that out. We do have an opportunity for anyone who, if they're interested in learning more about raising capital and being a part of this program, our Capital Raisers Academy is this amazing masterclass. We'll share information with you so that you can share it out to your folks, and whoever wants to join, we have an incredible offer for them. And I think the most important thing is that what I've found in almost every group that I've gone to, every person I've talked to, the number one thing that holds them back is this fear of money. And most people, like myself included, I learned how to do fixes and flips and subject to and wholesaling, and I could never get it done until I figured out how to get over the fear of raising capital, the fear of money. And we'll help a lot of people with that. But if you don't even join the Capital Raisers Academy and you don't work with us at all, realize you've got to get over that if you want to be successful in this space, because money makes the world go round, as they say. And a lot of people have program conditions that prevent them from moving forward with this. But I'll say it's a lot easier than you think as long as you apply yourself to it.
Absolutely. And I do want to tell the audience, Jeff and Kylie have put together a fantastic program for you with a great discount. You'll be getting all that information. And in addition, we wanted to not just give you the tools for capital raising, but also learn more about starting a business in storage. So with his offer, the SBOA is going to give you full access to our 25 hours of education of storage for rookies. So you'll get information on how to start your business, you know, the information that you need, and then how to raise that capital. So we're really excited about putting that all together for our audience. And we really are very grateful to Jeff and Kylie for being here, explaining all of this huge wealth of information. I know it's just the tip of the iceberg. And RK, I, of course, always want to thank you for showing up and showing out. And we love you.
Thanks so much.
All right.
Thanks, Kylie. Jeff.
Thanks so much for having us, folks. We really appreciate it.
Thanks, everyone. Have a great day.
Bye-bye. I just have a couple of parting comments for the audience. Just want to let you know we will be back with Self-Storage Unlocked in 2 weeks. Thursday, October 10th, we have another episode. We will be discussing business budget planning. So once you raise that capital, you need to know what to do with it. And we will be joined by Mark Sierri with Storage Defender, Darren Kelly, Move Storage, Andrew Jones with Just Storage, and Matt Phillips with Prestige Storage, And I'm just going to add the link for that down in the comments. You'll also see it when you get our next, our follow-up email. You will also get the replay. You will get the offer that Jeff spoke about. So be on the lookout in your email for the follow-up. And thanks everybody for showing up today. We'll see you in 2 weeks.